So now we're gonna start with the analysis. And when I woke up this morning, I noticed that there was something that we call accumulation, manipulation, and distribution. It forms no range. Mostly use higher time frame to have a clear direction. 15 minutes time frame, 5 minutes, we use it for an entry. So now you see it's forming no direction, higher high. You see, it's forming direction, no direction. And then when New York landing came, that was Asia session. And then 3 o'clock landing came to do the manipulation and set up the trade for New York. New York came to retest, and then it bought. And the market closed. So when the market was about to close, I told you to buy right here. So I told you to buy, I think, around this zone. After the break, it retests back to this level. Then I told you to buy at this level and leave it. Movement is called speculation. So speculation causes all these movements. And then on Monday, that was yesterday, because this setup took so many. Anytime it accumulated or it's the markets stay at one place for a longer period of time, it means the next movement is going to be very big. And I'll tell you, see how it is rejecting at my entry, my TP. I'll tell you how I got this. So when I woke up this morning, today is Tuesday, Monday or Tuesday, right? Or Tuesday. Today, Tuesday, when I woke up, the first thing that I saw was this place in yesterday. It's accumulated. All this place accumulated, no direction, and then it's manipulated. And this was the Asia low. This low was the Asia low of yesterday. It didn't sweep it. It swept it, but it didn't sweep the landing high. So this landing or Asia high, it didn't sweep it, but it came to sweep the landing Asia low. Perfect. That's when I knew it's going to distribute. And how I know it was going to distribute is that because after it showed me the accumulation, the manipulation, how I know this is the TP, the first TP for this distribution or the overall distribution, is that you have something we call Fibonacci extension, trend based Fibonacci extension. So you have to mark the trend started here. This is where the trend started, the market opening. So you take it to the highest level and bring it to the lowest level. So this is your TP1, TP2, TP3, and TP4. So we already know that by all means the distribution phase is gonna come. So we ignore this, and this, because it has already done before. It has done already. So we are taking to the next level, and this is our TP1. So if we bought this at this zone, this should be our TP1, and this zone, you see, 15188. So it came at that same place. You see, it hit it. So based on the 1 hour time frame, it started coming and retracing back to this level. So it came to touch this, what we call, let me remove it for you to see it clearly so that it won't be too much for you. So first thing that I noticed was that we are now in the distribution phase. And it also goes with my trend line. If you do a trend line from here, this is the start of the trend. Mark only the week and drag it. You see, so it's still how am I gonna say? So now it is still forming higher high, higher low, higher high, higher low. So now we are going with the trend. Don't fight against the trend. Oh, just the temporal cell, higher high, higher low, higher high, higher low. So what do you expect from here? Of course, there should be a higher high. So all these places a consolidation phase. So because sellers are very strong here, but eventually they get tired, they get weakened, and then it break out. That's why it went with momentum. So now the only time that at that time that you could say, oh, it's going to buy, it's going to sell, is until it breaks this level, because this is where this level. Why I said that? Because I was looking for an entry for you people. So when I woke up, I was like, okay, it broke this. There was a 1 hour candle momentum here, and it closed above this candle, this candle. That's how you look. You steady like a pro. Price action. So now I use the price action to get an entry for you people, because here it was forming a downtrend. If you look at a smaller time frame, you see that it's forming downtrend with massive candles. This is coming down, coming down, coming down. Now they've lost momentum. It still went up, down again, and it failed to close below it. So this should tell you that that was a sweep of liquidity. So now let's assume this is the sweep of liquidity. So now because it swept it, you see. So this should be the sweep of liquidity. After you sweep the liquidity, now we expect the market to close above that level. And now if you look at that level, I think it closed above that level, or this candle. So now let me mark it. You see, the candle came with momentum and it closed above that level, or this candle. So then I went back to 15 minutes time frame to see whatever is happening. So I went to 15 minutes time frame, and then I say, okay, let me see what's happening. So on the 15 minutes time frame, it's showing me the same thing. Look at what happened here. Look at what happened. It was forming a trend line here. It was forming a lower low, a higher low, a lower low, by a field, and then it came here, it consolidated, it couldn't form, and it came back again, and it's here and then it tends to start what, a new trend. So those who are using the trend line are going to make a lot of money, because it goes with the demand. So now those people who got the trade, we missed this. So now they will mark their demand here, right here, 15 minutes time frame. So now it break the trend line from here. After it broke the trend line from here, it came to retest the trend line again. So that's a demand. There's a 50 minutes demand right there, and then this massive candle is a confirmation that, yeah, it's going to buy. No matter what, it's going to buy. So now we have what we call break of structure or change of character right here on the 50 minutes time frame. Meanwhile, for me, I use only, so now they see equal highs. So this is where there was break of structure or change of character right here, and then this was what the sweep of liquidity based on 15 minutes time frame. So I told you we use higher time frame to have the direction of the market, and then to do the analysis, and use the 15 minutes time frame for your entry. So this is your what, liquidity sweep. It swept the liquidity. So now it swept the liquidity, it went a higher to change the character. Perfect. So this should be your what, point of interest. Now it came here, it pulled back, and then it changed the character. So now it changed the character, break of structure. So now it's telling you that it's going to what, it's going to buy. So now if we use only the 15 minutes time frame to have an entry, we're gonna miss this. We're gonna miss the entry. I've been doing this several times, then I end up missing the entry. So I went back to do my homework. Well, why did I miss this entry? So now at first I would have missed this entry again, because I would like, okay, now since it's changed the character, this is my point of interest. You see, then I'll mark it here. So it will come down, it will never hit my demand, 15 minutes demand. I'm like, what the fuck, what happened? So we see 5 minutes time frame is showing us the same thing. Equal high. You see, equal high, it came to sweep it, it formed a character. So 15 minutes and time frame almost went together. You see, sweep of liquidity. So let's use the 15 minutes time frame. So now if you want to get into this trade, you'll be like, okay, yeah, now there's change of character. So now we are waiting for it to come and retest the demand here, 15 minutes demand here, and it will take us what, to the next level. Now it is confirmed that it will break this level, this Asia high, this all-time high, because it has already changed the character for us in the 15 minutes time frame. That's how you have to look at detailed everything. So now you think like, oh, now it was what, consolidating at the top here, and then it's dropped massively. It was forming what, a lower low, higher low, lower low, higher low, lower low, higher low, and now eventually it break the structure, it break the trend, it retested. Still, I'm not going to enter, and then now it changed the character. So now this is when we are going to enter as a demand and supply trader. If it was, I don't do trend line to enter my trade. Even if it book this trend line, I will never enter, I will never sell. I don't use trend line to trade. I use to know the direction of the market, but I use my demand and supply or Kaizen retracement levels to enter my trades. So now this is another 15 minutes demand, fresh demand. So you'll be expecting that, oh, it should come and tap into your, what, your demand. You expect the market to come and tap into them, but you end up what, missing it, and then boom, it left. Why? Because if you look at the 1 hour time frame, there's something we call a bigger time frame demand. So now we have to ignore, you see where the demand is, we miss it. Yeah, the reason why, if first I used to miss it, is because I want to still use the 15 minutes time frame to execute my trade. Sometimes you end up missing it, not always. So now there was a demand right here. You see the demand? Let me remove it. So let me remove the break of structure or change of character. This is the sweep of liquidity. So now after it changed the character right here, if they change the character right here, break of structure here, it has to come and retest back to this level. So now we mark our 1 hour demand. Let me see, it could be 30 minutes demand self. So now 30 minutes, you see, so we use that. You should use 30 minutes or 1 hour. I think 30 minutes is fine. You see, 30 minutes, you drag your 30 minutes demand. It has never been mitigated. It almost mitigated the demand for the 30 minutes demand. 50 minutes it didn't, but 1 hour I think it did already. 1 hour it came to tap it in the demand and it left. So now we have to refine it because we don't have big capital to get into this trade. So we refine it to 30 minutes time frame. But if we were so greedy and we keep on refining it to like 15 minutes time frame, you see, we wanted it to come this level at 50.35, we would have missed this big chance. So let's say we use 30 minutes, so we just came to tap. I use the 30 minutes to give you an entry. No, I think I use the 1 hour to give you an entry, because the entry was 53. So I told you to get enter 55. So that is when I told you the entry is 55. So I let you put your entry right here because I don't want you to miss. So I told you what, if you want to use to do a swing trade, this is where the market is not supposed to come. Imagine, see how big the stop loss is. And then if you want to do a swing trade, you should put your stop loss below this. The daily trade or the inter trade, or for scalping, your stop loss should be below this demand. So how I got to know where this is going to pull, you see it is rejecting, is because I told you already that this is where the trend started. And then you mark it to this level and to the lowest point. You see it hits you see what happened. You see, after it hits it's not a magic thing or something. You see after it hits, so that's the TP1. It came back. You see, it hit there exactly, and now it is rejecting. It's gonna come back down or maybe continue going to this level. So if it is able to break this level, this is our next target, 5-35. And our next target, if it's able to break 5-35, 5-311 will be our next target. So now that's all to know about why I knew it's going to buy. And now look, in huge profit. So TP1 hits, as I told you, TP1 hits, that's it. So if you don't wanna lose much, your stop loss should be right below this demand. Not necessary to go to the liquidity sweep. No, it should be right below this demand to hit it. If you are somebody who can hold it, you can drag it to the second TP1, TP2, and then maybe TP3 right here, right? If we cannot be holding this trade for so long, so we expect them take your TP, let it pull back again, then you go again. If not, we look for an entry here. If you have a confirmation it's going to continue, then we enter here, take us to 5235. That's all. That's when I knew it's going to buy. So if you want to trade and see the market like a pro, you have to look at almost every time frame, because I use the 1 hour time frame here because I saw the momentum here and it closed above this candle. I was like, so far as this candle has closed above this, it means there will be a change of character in a smaller time frame. Then I run to 50 minutes time frame. My network. So I ran to 50 minutes time frame, so I saw the change of character, so it has to come back and retest it. So now those who are using the fair value gaps, FEG or imbalances, they will get the trade here and take it them up. But we use demand and supply, but you have to know how to trade the demand and supply. So now if you use the 50 minutes, you are expecting the market to come down. Sometimes it's good, you save, your stop loss will be small and then you have a huge profit, but sometimes you would have missed these big chances. This shit happened to me like more than 4 times. I've been missing these chances, and now look, that's all. If you don't understand anything, just let me know. You see the trend, just let me know. I will teach you one and one. But now, right. You see, yeah, that was the entries that I give it. You see, this is what I added at the trade because I knew. You see that my entry 40, 40 50, 50, 49, 50, 49, 48. The same entry that I gave it to you people in the gray box. If you look at the gray box, what was the entry? 50, 48, 50, 49. So sometimes it's not really about if you are trading demo, you just random. No, use the demo to master it. If you trust your skills, just you place the order, put your stop loss where you want to place it, and put your TP. If you wake up, it didn't hit your TP, you think you don't have the patience, close it and wait for new setup. Don't chase the market. And now this is the movement that it wants to do. The first movement, it might come back again to this level, so just use the trend line, and now it might come if it only. But with this momentum, I don't think it's gonna come right now, unless maybe they could do anything. And then from here, if only it comes to, don't expect the market to come to this level, and then what, take it to the next level, take it to the next level. That's all. Welcome back, guys. Today we're gonna continue about what we discussed yesterday. As I told you earlier on, our TP is right here at 5 to 37 or 35 or whatever. And now after the breakout, we went straight to hit our TP. So there's nothing much to say today, but I just want to prove to you the analysis that we did. We took for me, initially I started right here, it came back to retest. I told you if it comes back inside the gray box, buy it and put your stop loss below it. If you want to, you could put your stop loss right here or here. In the previous video, that's what I told you all, and alhamdulillah, we hit the TP. So now there's momentum in the market. And I don't want you all to chase the market. There's no need to chase the market. If you are not in, make sure you don't just involve or put yourself in the middle of the trade. Anything could happen. There might be a pullback, Look at massive candles, 4 massive candles. So we should tell you there is still momentum for buys. So now all I expect you to look for buys is, let's see, is 4 hour demand here. This 4 hour demand is very, very strong. Oh, let me look at the 1 hour. Yeah, I think that's where it consolidated. You see, it goes with the consolidation that I told you, and then boom, it went up for them to do the distribution. And this could be what we call maybe consolidation, and then what manipulation. People might think it's still gonna buy, and then it will come back to this level, then it will distribute. So it could be something like this. You see what happened? It consolidated, and then what? It could be, this could be the manipulation, and then what? And distribute back to this level. Or it could what? It could consolidated, and then come and take people out again, and then it will go high again. Now you see that it is in the consolidation phase right now. Now it could, this place could also be what? Consolidation, and then come back to do the manipulation, maybe up to this place, and then what? Do the distribution again. So just watch out, don't chase the market. I didn't even involve myself in this trade. I saw it with this momentum, I just don't want to jump into the trade. That's like chasing the market, chasing the price. So we had 2 TPs, one here and the other one here. So let's see how it goes. Have a good one.